Hello friends, welcome back. Let's talk about Tesla 369 frequency. Now this pinkish magenta line is our 369 frequency trap. What we are expecting is when the market is rolling and is going in a certain direction, and this is an hourly chart because we want to do this on a hourly chart. The reason being is again a 369 harmonics. So what we are doing is we are pinning the time of 60 with the frequency of 369, and we are trapping the frequency vibration model based on these frequencies. The reason we want to use 60-minute chart is also we are looking at a DNA structure of the market initiation. So I'm going to roll this single. When we drop it, is simple, a one click, and I'm going to place it here. And what am I expecting? I'm expecting market to go to the frequency right here. And what do? I put a trigger, auto trigger to trade, and the trade is going to have a automatically hedged position placed with the bias of reversal in the direction I want to be trading. So you can just have these automatically placed orders. You don't have to worry about them. Second is we are going to place it here, and again this is you trade 2-3 times a week and you're done for the week. And this is a perfect approach to trading future options because we have very highly customized frequency levels, which gives us ample time to know where market is going. So we are ready for it days in advance, as you can see. So by placing it here, again it goes to the pink frequency and comes back hard. What we do here, we place a hedged trade. We take a short trade here, let it go, and if it goes against us, we hedge it at this point using the option strategy. Both instruments are open 23 hours a day. And we are dealing with not 5 points, 6 point scalps. You're dealing with 100 points, 5 grand in one direction, and we're trading, let's say 3 contracts. So we're looking at $15,000-$20,000 a week, and we're going to lose 25% or 30% on the hedge if we get logged into a hedge. So there we are with that frequency. Now we're going to hit at this point, and I'm picking a certain points which are defined in level 1 coaching why these points are being picked. And we are again here, and again we are hitting. We hit this point, we hit this point, we hit this point. So you can see we got all the biggest move for the entire weekly range. Rest you can have a tactical move how you want to benefit from this. I just gave you an option. Now market is coming here. We're not ready for our scenarios, but here it is. The first scenario shows up here, and this is, I'm looking at a DNA structure of the market, and level 1 describes that structure. It's going exactly at our levels and bouncing back. Now I'm going to restructure myself right here. So we hold, remember, we are going to go after trades because ES future market is open 24 hours. So we're going to use ES futures or future options. Again, tactically, we have to see which is going to be used as a bias and which could be used as a stop loss. All right, all we do is just left click the mouse, and now we are here. Now at this point today we had a very strong, and coming from this big momentum, this is where you need to hedge. You can see it went to the other location and it blew through that. This is where the hedged scenarios are usable. Hedge funds are supposed to hedge, and this is one of the, so we took out of this 4 trades 1 2 3 4, the 5th trade is where the hedge was really usable, right? It got triggered. So I always personally go with the biased hedge. All right, so where are we now? I'm gonna put this frequency at this point, and what are we looking at? Is we're going to go up. We're looking at 4900, 4910. What is it? Let's check it out. There it is. Now it goes here and start coming down, and then we also have, we can predict that as well. So what we can do, we can say potentially market is going to go in this area, okay, and we'll make our decision based on this game plan. And then when it gets there, we can assume that's gonna get there. Okay, and if it does get there, it's gonna rotate. Now the problem is I don't have a price. This is based on the closing price, so the price is not there. I can't really tell you. But when we get there, we'll place the tool here, and then we are looking at the next move up and down. So this is where we are right now. This is how the frequencies are used to do a very effective, beautiful swing trades, and we can use that in every market has its own frequency. This is a frequency exposure of ES future market, and it is done on a 60-minute chart. Thank you so much.